Okay, good afternoon. Welcome to the weekly take on the market. I will be your host. My name is Scott St. Clair. I am the manager of the Premium Product Group here at Investors Business Daily. It is Friday, October 18th. It's about 11:30 my time. It was now or never for the video. So I might have to cut. I'm going to cut the industry group section for sake of brevity. I apologize. But do your work. Look through that this weekend. Um, I lost my train of thought where I was. Here's my bio. Here's the disclaimer. Nothing I say can be construed as investment advice. I'm not a license. Can't tell you what to buy, what to sell, what to hold. You guys know the drill. All right. So overall market thoughts. There is a lot of positive sentiment on the market. This is from Sentiment Trader on Twitter. Stock sentiment versus bond sentiment, which I thought was very interesting. The highest rating, a lot of people are bearish bonds, even though the Fed cut rates. The bond market or rates actually went up on that news. Bonds went down, and I guess as a general rule, the more stocks go up, the more bullish people get, and vice versa. It just happens. Again, I'm going to repeat myself. Unfortunately, I do repeat myself a little bit. It's not a good indicator to as far as timeliness, as far as getting out of the market, a sentiment. But that doesn't mean you can't shake the tree a little bit once in a while, which is kind of what they did. I think yesterday, the Taiwan semiconductor news was really positive. Market opened strong, gave it all back, but then they catch it, and then today so far is a positive day. So they tend to shake the tree a little bit more. Whereas if sentiment was really bearish and you had something like that, the market would probably rip to the upside for a handful of days, 2-3 days, something like that. So keep that in mind. Here is a great chart from Steve Burns, I think, on Twitter. And I talked about this in my Founders Club webinar, and I might have mentioned this chart before. But what I like about it is, well, some of these guys are incredible. Their returns, 120%, 87%. But most people here are 13, 15, 17, 19, 20, 25. Now they're doing this, a lot of them on big money. But if you can make consistently 18, 20, 25, gosh, 28% on your money, the compounding of that is just tremendous. Now, I'm not regarding taxes, because forget, it's really difficult when you have taxes, right? The compounding, right? You make 30%. Well, you really only made, let's say, 15, and then you made 15. You really only made 8. So, but in a non-taxable or a tax deferred account, if you make 24%, what's the rule of 72? You double your money every 3 years. Every 3 years, you double your money. How many doubles do you need? And so you get a double, and then 3 years later, you get another double. And if you had 100 grand, you get a double in 3 years, you now have 200. And then 3 years later, you get another double, you have 400. And 3 years later, you got 800. And then three years later, you get 1.6 million. It's not that easy, believe me. But you get the idea. You don't have to hit it out of the park and make 100% in your account each year, like we're all think and striving for, to do really well in the market. So the main message I think here is that I think a lot of people have kind of unrealistic expectations of their performance and how well they should do, because we all are human, and we see, these stocks that we had. Like, I had a really large position in Oklo, the nuclear one, and I'm over here doing the math. I mean, I owned it at 9 and stock's 19 as we sit here. What if I had kept my whole position from 9 to 19? It's just not feasible for me to do that, unfortunately, because 10 other ones go from 9 to 11 back to 9. And then I would be upset that I didn't get out of some, on the way up at 10, 11, 12, whatever that number might be. So consistency, don't dig yourself a big hole is the key. If you make 50% one year, you make 50% the next year, and then you lose 50% the following year. I don't know. I didn't do the math on that, but that's probably like an 8% compounded return. It's just going to just collapse your overall progress. So the way I like to do it is to give up some of the upside, to avoid some of those downdrafts. And that way, when the market's good and you're compounding on more money if you have less of a drawdown. There's pros and cons to it, yin and yang to all of it. It's not the easiest thing to do, but that's kind of the thought process. So if you're this is what you're striving for, something like this, to be up there with these guys, incredible returns. All right, another thing that I talked about a lot at Founders Club, and I really like to emphasize is data points and accuracy and confidence. So the more data points you have, the more accurate you might think you're going to be. What it really does is it increases your confidence in your what you're doing. So it doesn't increase your accuracy. So you can see here each data point, their confidence increased, but their accuracy pretty much stayed the same, give or take a little bit. So it's nice to have a little bit of data points, but more and more and more is not going to increase your accuracy. So, but it will increase your confidence, which could be detrimental to you, because if your confidence is increased, you tend to overbet or risk too much, or or you might ignore a stop loss. So there's a famous horse racing study in this regard, and they gave these handicappers 5 data points, and then they gave them a bankroll, let's say $1,000, go bet the horses. And how well did they do? And then they gave them 10 data points and gave them that same bankroll, go bet the horses. Then they gave them 20 data points, same bankroll, go bet the horses. And what happened was their accuracy pretty much stayed the same with all the data points, but their confidence soared with more and more data points. And so they did progressively worse in managing their money because of that increase in confidence. So earnings, sales, group strength, relative strength, fund ownership, return on equity, margins, I think at that point you have enough information to make a decision, relative strength, and if it doesn't work, you stop yourself out. That's kind of how I handle it. All right, so let's jump to the turn my camera off, and then we'll jump to the indexes. So here's the NASDAQ, and this is the fly in the ointment. The relative strength is poor, and today, pretty good day. NASDAQ's up a little bit, but the relative strength is not participating all that well. What's the S&P up? I think the S&P is up a little bit more, but the S&P is basically this would be probably an all-time closing high, I would guess. And it's an uptrend. Like I've said before, they tried to get it, couldn't. Tried to get it, couldn't. It's an uptrend. Market's it's in an uptrend. It's going up at this point. Could it stop? Sure, but why try to guess when it's going to stop? And then this, even though I don't like this relative strength, this structure by itself is very constructive, looks bullish. I wouldn't, if you gave me this and said it's XYZ, would you rather be long it or short it? I think I'd rather be long it if you allowed me to stop myself out if I was wrong. I just, that's how I see this. Again, they tried to get it, couldn't. They tried to get it, couldn't. A single day down. You see how it's getting harder and harder for them to take the market down. And then maybe eventually you get a little pop. And if it gets to new highs, I just don't see how this RS line is going to be a new high. but we'll see. We'll see how close it is. So that's kind of what I'm watching as far as the indexes. But I don't want to say ignore the indexes, but I'll be on, I tend to do better when I am not so focused on them. I'm just looking at what stocks are doing, what my stocks I wish I owned were doing, stocks that I do own, am I making progress, et cetera. So I just think for me, I don't want to say it's the right thing for everybody, but for me, the indexes have in the last handful of years gotten tougher for me to interpret. I tend to get fooled by them. I get bearish here and then they catch it a day or two later. I get bearish here and they catch it a day or two later. All right. So I get bearish here and they catch it the next day. So I'm like, when I get bearish, I say, okay, well, I'm bearish. What's been happening lately? They're going to catch this market. Scott, be ready for that. Now, maybe one day they won't catch it. So I get bearish here and it rallies and wham, and then they do this and then it rallies and then wham, does that. And then that would change my tune completely. But until then, I think I'm more erring on the side of giving the market the benefit of the doubt and trying to find areas to buy pullbacks if possible, as logical as possible. The S&P, yeah, it is what it is. The Dow, I haven't looked at that in a while. No, brand new high. How about the Russell? Anything there? I mean, it's not my favorite index, but if you force me to be long or short, it's an easy decision, long. Um, what today is kind of an interesting day in the metals. Now, gold has had I think gold, in fact, I'm pretty certain I read gold is up more year to date than all the indexes. I think it's up like 30% year to date. Of course, because I've always tried gold and got out, and then it's finally just kind of wore me out. Like AEM, for example, I think I was buying here or here. I don't know, somewhere in there, and I look at it now. But I don't. From my style, these are pretty tough to tolerate. But what I would do normally is get back in, get back in, get back in. I would just keep trading it over and over and trying it. But I haven't for AEM for whatever reason. So, but gold looks very strong. I think it was Jim Ropel that called this the mother of all cups with handles or something like that. And look at the breakout, like so it looks very, very good. I don't know what the message is. What is the message that the metals market are trying to send to us as far as the stocks, the economy, interest rates, inflation, and all of that is fun. But again, I don't know what that message is. I just know like that looks like it's going up. I should be long it. I'm not, but I should be. Now, silver is the other one that is finally getting going, although I'm sure it's done really well. But this looks like I bought it there and got stopped the same day, and now here it is again. So I own silver. I do not own gold. I own silver. I don't own this one. I own, what's the other one? Is it PSLV? You think I'd know? I bought it, right? So I bought this one, and I don't know the differences between them. This one is Sprott, and I think they actually, in a vault somewhere, they actually own the physical stuff. So it sounds neater. But this is coming out of a nice long base here, double bottom. But also like if you go to the monthly, it's making what 4-year high. If this was a stock making a 4-year high, you'd be pretty bullish on it, something like that. So I'm curious about the message, but I shoot first, ask questions later. They look like they're going higher. I think last week I looked at copper. So I still have this trend line, nothing yet there. But today, platinum seems like it might be a little bit early, but this looks like maybe it's rounding out as well. If I go to the monthly, it's done nothing. So maybe it's a little bit early, but if it were to get above 10.5, what would be the message that these metals markets are telling us? So gold was the first to go. It looks like silver's following suit today. And then maybe these other ones start to go. It should be interesting if you're into that type of stuff. If you're not, no big deal. You don't have to worry about it. Just say, I'm not, I won't own metals. End of story. Move on. Look for stocks to buy. All right. So let's look at. Okay, here's something I wanted to talk about, like a little lesson on stocks. This was IBD Live on Monday, I believe, when I was on the show. Somebody asked about this stock. So EPS is pretty good. The group is very poor. You got all the metrics right there. Screenshotted it. I hid the stock ticker because I just wanted you to look at this as objectively as possible. Say, would you buy that? And there are some things that look pretty good. Like you could maybe manufacture some kind of double bottom pivot at 212.5, right? But there are some things like, oh gosh, there's a bad gap down break on the left side of the high. And like, where is the relative strength? The relative strength is very poor compared to, I don't have the rating because this is a backwards dated chart, but you can see the RS line. And what if I told you this stock? So would you buy this? Yes or no? What if I told you it was in the same group as Nvidia? So would that change your mind about the stock because it's got the leading stock in the group, or Taiwan Semiconductor, right? Or the sector, I should say. It might be a different group, but it's in the same sector. So think about it. Ask yourself if you'd buy that. And then let's go ahead and go to, let's go to stocks to watch. And that stock I just had was Applied Materials right there. So somebody was asking about Applied Materials, and my 2 cents were, why? Why Applied Materials? Just buy the leader, buy NVIDIA, buy TSM at the time. And I didn't realize they were going to announce earnings, but TSM was right here or right here, somewhere in there before that. So that one's already a new high. Buy that one if you want to buy something in this sector. Buy NVIDIA if you want to buy something in this sector. But we as humans sometimes like to buy, well, this one's cheaper, Scott. You know, you kind of can imagine, boy, if it can get back to 250, you know, I'll be up 25% when that happens. But there's a reason that it's lagging. And ASML accidentally pre-announces their earnings during the day, and that stock gets slammed, and AMAT is in that same equipment group and gets slammed as well. So the message is I've seen this in my career over and over and over. It doesn't happen every time, but I can count a million times where a colleague that I used to trade alongside would say, boy, NVIDIA and TSM are sure strong. We should buy AMAT. That's going to go next. And for one day, it seemed like you were right. And I would witness this over and over. Amazon is strong. We should buy XYZ Commerce. Microsoft is strong. We should buy ABC. And it was like, eventually I came to the point, it was like, well, every time he would say this, I would just say, okay, it sounds good. But we were just trading independently of each other. But if I was considering, I would just buy Microsoft or the leader that he was comparing to was the one that was the better buy, So like VST, it's a good example. Like, oh gosh, VST is breaking out hard on 920. We should buy NEE. That's going to play catch up. Well, didn't look bad, but it's not the one with the power, and it's gone nowhere while VST is up 23% from the pivot and was up as much as 34%. So focus on the ones that are showing the strength. If you find yourself, you ever catch yourself saying, boy, XYZ looks good, I think I'll buy ABC. My experience is 8 out of 10 times you want to buy ABC. Or let me rephrase this. 5 out of 10 times you want to buy ABC. 2 out of 10 times you do want to do what you're thinking of. It's not going to work every time. And 3 of the times you were better off buying none of them. Something happened that caused both of them to go down. But this is the focus on the leaderships, kind of stay in sync with the leadership. So the leadership, NVIDIA, nothing wrong with it. Their RS line not quite new high, but you can't argue that. I don't love the price action, and the sentiment in this name bothers me a little bit. So I don't own it, but I know a million people do. And nothing wrong. Acting great for sure. Microsoft, I mentioned that one. The relative strength is poor. Let's go to the FANG stocks. So let's look at the FANG. Is it S? It's not levered. And so this looks just fine. And today you had the Netflix news. And I'm going to guess this is an all-time high for Netflix. Gosh, incredible story. So maybe the fangs are, it just depends on which one you're in, are ready for another leg. Tesla, this is a cup with handle. I'm no longer short it. The strength in the market, it just doesn't make sense, in my humble opinion, to be short anything right here. So I covered it. I can't remember, 5 days ago, something like that. Because they just don't want to go down. You might see them go your way for a day, sometimes 2 days, but really, it's been very slim pickings in that regard. SMH, which is the semis, because this will include a little bit of ASML, a little bit of Intel, a little bit of AMAT, a little bit of NVIDIA, probably all of the above. Looks a little broken. If I turn off the pattern rec, I can sort of see like this is a possibility. This would be an area that I would get short if I want to get short, but it does not feel like something to do today, next week. Maybe 3 weeks from now, we do have the election coming up, and whoever wins, who knows what the market's going to do. I haven't the slightest idea if the market's going to be throw up all over itself before the election or after the election, or not at all. But I'm open to any of those scenarios. What else is out there? STX, kind of slow and tougher to own. I haven't owned this one. Duquesne Capital has a good sized position in it, so I've been interested in it, but I can't remember if I bought it there or bought it here, and it just kind of plods higher. So it's a great earnings are due in 4 days. So that's another kind of fly in the, and we are getting into earnings season, obviously, because you had the Netflix news. The stocks that I've been in, C Limited, doing nothing wrong, just sitting there. I'd love for a pullback, but I don't know if I'm going to get it. CEG, acting great. VST, acting great. It just comes down to style. For me, these were sells because of style, but for other people, there's no reason to sell. It's done nothing wrong. And if you follow the kind of this 8-week hold rule, you're still in week, what, 3, 4? Oh, it is 5 weeks. You still have 3 more weeks to try to evaluate it. So, what else? Argentinian bank. Yeah. You're up 37%, 36 days in an Argentinian bank. Now, again, Scott, I'd never buy an Argentinian bank. No problem. I'm not saying that you have to buy these or considering these. I just think I want you to see the possibilities are out there to follow a process, buy a stock correctly, hold it correctly, and sell it for a pretty good profit. Now, I did those 3 things mediocrely. I hate that word. I did those 3 things very pedestrian like, which is a better word for me. But I was able to make some in a name like this and do pretty well. And so if I can do it, I know other people can. What else is out there on my radar? Oops. Let's do this. Let's open the stock ideas button. And I wanted to talk. I rarely talk about this, but breaking out today. So this ALKT. So I saw this alert. I don't know anything about this, but the earnings and sales are pretty good. Relative strength's pretty good. Coming out of a base. Last couple quarters pretty good. Look at that weekly, relatively new. Relative strength line, new high. I mean, it kind of did what a lot of IPOs do. They congest for a long period of time. This is very interesting to me. I don't know enough about the company to get in there just yet, but and the EPS line is very strong. So breaking out today, near pivot, there are 11 stocks, so there's stuff to look at. Recent breakouts, 32 stocks have broken out in the last 15 trading days. That's what this list is. So there's stuff out there. The market is healthy and giving you opportunities. And I know some of the best ones are probably gone, like App Lovin. You're really at this point waiting for pullback to the moving average or another base. Duolingo, I know they talked about this one on IB Live. Pullback or wait for another base, but the names are out there. And then there is a little bit of speculative fervor in the market. The nuclears went nuclear. I am no longer in this. To me, this is I sell into this. That's just what I do. And unfortunately, I'm sold it. At 19 and change, I'm out too soon, way too soon. But that's fine. This is I think on IB Live, one of the guys said this is not a stock that Bill would buy, and it's like, oh, okay, so that's fine. But it is one that I'll buy because I knew it could move if it got the narrative, and that's something that I look for. Is like I think the market is big on narrative, whether it's solar stocks or EV stocks. What part of what moved Tesla, in my humble opinion, was the narrative. Part of it was the execution of the company and et cetera. But let's be honest, I don't know what percentage of the move was narrative based, but it's in there. So I like to look for the narrative a little bit. I'm okay with that and manage my risk as best I can accordingly. I think there's, and as SMR did pretty well as well. I talked about the CEGs and Vistas of the world. So I think that's it for now as far as stocks. I'm pushing 12 o'clock, my meeting. So quote of the week. My investment philosophy is simple. Aim not to predict the future, but to see the present clearly. I know Bill O'Neill has said something of this nature as well. And I just constantly try to bang this into my own head and just get this in through my thick skull. Excuse me. That this was by Jawad Amin. I apologize. Gosh, I think I butchered his name. He has a blog. I think he has a book his book is called Stray Reflections. And he's like a thinker. He's not really like an investment uh, guru or investment counselor, or not telling you what to buy or sell or hold. At least I don't know. I've never subscribed to his newsletter, but I do get his free blog. I have read his book. I have watched him on interviews, and so I like the way I think he's just very a really strong thinker, for lack of a better term. And so I like to listen to him. So this came across on his most recent blog, or maybe he tweeted this. My investment philosophy is simple. Aim not to predict the future, but to see the present clearly. You do not need to predict the future to make money in stocks. If you think you can predict the future, get yourself a journal and write down what you think each day or each weekend, and then go back and look and see how well you predicted what would happen. I would guess that you'd be surprised at how often you get it wrong. You might get one or two right out of 10, but I think most of them you're going to get wrong. So You don't need it though. Just what is the market doing right now? The market's in an uptrend. Could it end today or tomorrow? Sure. So how do you relieve that anxiety if that bothers you, knowing that that can happen? Well, I have a stop loss plan or I have a portfolio stop loss plan. Maybe you tell yourself, if my portfolio ever goes down 5% off the high, I will liquidate half of it. And then if it goes down another 5% from that point, I will liquidate the rest and just kind of start over from scratch. That gives you a 7.5% stop loss on all your liquid money from wherever the high happens to be. And that should give you, if you should, hopefully you should be okay with that. You can come out of a 7.5% hole. You don't even need to make 10% to come out of a 7.5% hole. So, or if it's down to individual names. I own XYZ at 20. If I'm wrong, I will get out at 19. Or like I like to do it sometimes is I own it at 20 and it's 23 or something. I'm going to sell a quarter of it at 23 and then just leave the other 3/4. That way, if it comes all the way back to 20, I get out and I made a little bit on a portion of it with the idea that, I think a lot of people call those like runners, that you leave a runner or you do the opposite, but just do something like that. So, but you don't have to know where they're going to go. In fact, I think, and I'm again constantly preaching to myself this word imagination, because they often go further than I could ever believe both ways. And Oklo is just a perfect example. I mean, I own that at 9, not more than maybe 8 or 9 trading days ago, and here it is at 19. I guess I didn't have the imagination that it could go to 19 in 7 trading days. I thought, well, it could go to 12 or 13 or 14. And I thought that was pie in the sky dreams for myself because I was all bulled up on it. So each day come in, oh, it's acting well. It's closed pretty well, Scott. Maybe you can go a little higher. It didn't close all that great. Maybe I need to reduce some of it. Oh, it did all right that today. It shook off like I think it was yesterday. At one point, it was low as 14. By the end of the day, it shook it off. It practically closed unchanged. Oh, that's good action. Let's give it another day, and so on and so forth. So each day, just evaluate independently, and I think you'll find your performance overall will improve. Not every day, but overall will improve. All right. Am I back next week? I don't know. I think so. Yeah, I think I'm next week, and then the following week could be Harold and Arnie. 800-831-2525. Market Surge at investors.com. We do get all of your emails. We answer every email. We might not give you the answer you want if we don't know the answer or cannot answer the answer or give you the proper answer. Like if you were to email us, Scott, what do you think XYZ is going to do? You'll get an email back from us, but it won't be what I think XYZ is going to do. So I appreciate everyone. Have a great weekend, and we will see you next week. Bye-bye.